Hey guys, Ashley Cheeks here. We're going to talk today about a really common question that I get from my clients, which is, do I need to hire a CPA to help with my financial projections? Now, the short, quick answer to this is no. A CPA does not need to look at your financial projections and should not be leaned on to put them together to begin with. A CPA's entire job, training, and education is teaching them how to look backwards at numbers and at what actually happened and tie everything out. They're there to reconcile the past, not predict the future. So when you show a CPA financial projections that are based on intuition, a little bit of research, and some foresight, they're not going to be able to validate that information, and it's going to drive them crazy that you've asked them to do it to begin with. That being said, there are two exceptions to this rule. The first exception is if you are actually looking to go public with your company in the next 12 to 18 months. If you're planning for an IPO, you need to have a CPA on your team who's familiar with your financial projections. When your CPA understands a bit about the financial projections and what is expected on the horizon for the business, they can help you as an ally in talking with shareholders so that everybody understands what the business is planning for and what the next steps are when it comes to revenue growth for the company post-IPO. The other exception to this rule, you definitely want to have a CPA involved if your investor, who is going to potentially give you funding, has asked to show your business plan to their CPA. So if your investor has a CPA who they want to run this business plan by, you need to run it by your CPA first. Now, you want to make sure that your CPA is being asked to validate formatting only. They are not to validate projections. They're not here to tell you if they make sense or if the numbers are possible. They're only here to tell you whether or not your financial statements are in proper form. Does your balance sheet balance? Does your income statement tie out appropriately to your cash flows? And other nuances that other CPA will look for. That way, when your investor shows the business plan to his CPA, that CPA will be able to see it in the proper format. And from there, you guys can have a logical discussion about what makes sense with these numbers and what your thoughts were when you put them together.